Good morning. Let's get going. New all-time highs for the Nasdaq here, and just keeps marching ahead rather slowly. Assumption is it keeps going higher until something changes. We will bring up our new reference point, or first reference point of support under yesterday's low. There's a little bit of range expansion there, and this morning there's a little bit of a slowing in momentum here. That's prior to the open, normal, I suppose. And how do I know that? Well, look at the first move. I had this little retest. Notice the little shakeout down there and a little pullback in here. So as you know, in the green room, and those who've been around for a while, how we read momentum is not with the squiggly lines down here called indicators. We just look at the distance between the highs here. So nice, strong push and the pullback and new high and immediately reversal. That doesn't mean it'll break down, but we're just recognizing different concepts in multiple time frames. So the momentum slowed down here on the weekly chart a couple of weeks ago with small candle bodies and small ranges. And, there was this bit of underperformance here. Notice that we talked about the breakout failure. It held the support line here, and on the Qs came down to an unfilled gap. Then we had the possibility of the M top. No good, didn't happen. We'll see where today goes, but the assumption is since it's cleared this high, it'll keep going. There's nothing to stop it. And pullbacks within the middle of that range are buyable. Right? So if prices should start to retrace, we want to see buyers step up again. And of course, day to day, we want to see green days, meaning they close above their opening price. We're at the beginning of the day, so we shall see. So every day, no matter what it is that I'm looking at or considering to trade, a stock or broader market indices, I look at is it above its opening price or below its opening price? If it's above its opening price, that's a plus. If it's above its opening price and yesterday's close, that's two pluses, and so on. So strength continues most of the time with more strength until some type of reversal. So as intraday traders, those are two really easy things to take note of in your checklist or your trading plan. Say, well, if I'm thinking of going long or current prices above both of those reference points or below, or above one, below the other. Really simple, no indicators needed. All you need is look at the chart. And you can also do that in your minder. And as you look at your minder, if you've got two green columns, those are the ones you're going to want to look at the charts as for longs, and two red columns, possible shorts. All right, let's look at the other markets. The S&Ps, we're all waiting. It's right at the goal line. Can it push up above and, of course, close above it? Where is that on hourly, the pullback you want to buy? Well, McGraw, the first thing we look at is just the middle of the range. So wherever that falls, right? So if I say, okay, what's the middle of this range here? If I look at high to low, if I eyeball it, you can see the number there, 11,226, thereabouts. All right, so 11,226 would put it in the middle of nowhere, but this little minor support area, right, would be where that falls. Now, since you've thrown the question out there, I have to take it further. So what would happen if it actually went down there, right? First of all, we're saying as long as it stays above this level, it really hasn't done much damage to the daily chart. Right? And if something retraces, we're talking common sense here, it retraces halfway into a green bar like that within an uptrend that made new all-time highs, there isn't much damage done. However, the intraday time frame has been damaged because it's traded below major support if it comes down here. So now we've got a conflict between this intraday time frame and this daily time frame. What do you do? Well, assuming that the higher time frame is going to take over based on coming to this level, you wait for stabilization. And you could then go to your 15 or 5 and look for that rounding kind of a bottom, similar to what I pointed out in Boeing around the lunchtime hour, just to give you a reference point of the kind of price pattern you'd look for. So part of our method, our reasoning of what's happening in the markets or whatever we're trading is that this is going to take over. Right? We have to make an assumption. This, if it comes down here, has violated the uptrend on the hourly chart. We already know that momentum is slowing down. So as it comes down here, let's just pick this pattern right here. Something like this. It could happen in many different ways. So as this is damaged and it comes down to our reference point, and it could be here or here, we're just eyeballing, right, a 50% area, give or take. Now we look to the left to see if it lines up in that. And then we see what kind of pattern will form in here that buyers begin to show up at our reference point and then continue on its path from the higher time frame. So there you have it. All right, S&Ps, I said, knocking on the door, trying to get through the goal line there to a new all-time high. I mean, it's like on the 1 yard line, and it's just stalled. We'll see. And it should go through. Should go through. I would think. Why not? Right? Qs are already through there, but if it does, big deal, right? I mean, okay, a new new all-time high in another market. Now what? Well, it could immediately reverse. Same story. Prior day's low, first reference point of support. There are no pivots. There's no pivots. Here was that momentum move. Right? We talked about a couple of weeks ago. The reversal day, it didn't, no follow through, back up again. These little narrow bars. Now, one of the things, as I looked at this last night and this morning and thinking, could this momentum, this slowing momentum, this going nowhere, running in place, will it just take off from here and run higher? It could, right? I don't know. What about on hourly? Do you mean this one, Ludwig? I mean, we're talking about the Qs, so. Oh yeah, well, different time frames. Just the lower the time frames you go to, the more pivots there's going to be. So we have to work, right? We make choices as the time frames we're going to utilize. And as you know, we look at the daily and the hourly and the 5 minute for intraday. So we got lots of pivots here on the hourly. What does that communicate to us? A mess. Meaning when you've got pivot highs and pivot lows that are opposing each other in a tight range, you have uncertainty. And the technical master trader term is a mess. Right? So a little levity there. Anyway, it's just another visual aid, so to speak, just like a moving average and moving average alignments. It's a visual aid. If I see this picture, it communicates to me, you're probably best to stay out of that within this time frame. Now, if it spikes down like this did, and there's another pivot low to the left, well, then maybe that's a trading opportunity on the long side. So multiple time frame, alignments and all that, another analysis has to come in. But yes, there's lots of pivots here. So what I wanted to bring out was most of the time, these really slow, sleepy markets, whether it's a market or a stock, it doesn't make a difference. They typically don't just come out of these tight consolidations and just pop big like that, they're usually preceded by something like this, right? Since I don't have something here, right? Something like this, where it spikes down like this, which we call a shakeout. Some type of an event that just the longs just get tagged, stops get hit, and immediately reverses, and that spike in volatility and then resumption of the bigger time frame trend is where a lot of times these bigger moves start. Excuse me. So I don't know if that'll happen, but it's just a thought that I wanted to share with you because it's a relatively common thing that happens. So really, really tight ranges, and we'll see how it unfolds. Let's see the other markets. YM, tight range. We've talked about bringing up the rear, and while excuse my voice this morning, the S&P could make new all-time highs. I think on a day trading and probably swing trading basis for a couple of days, the opportunities are in what have been the laggards that have started to outperform. So this is a much more attractive pattern where you've got this momentum run up and this downward sloping type of a correction. And notice the bar right there, the spike down. And so now it's holding. So this is called a bull flag. Call it whatever you want. It's a bullish price action after a momentum move higher. So I don't know whether it's going to take another day or so, but it's getting to the point, I think, within another 1 or 2 bars that it's got to make its move. So this has created an intraday reference point of support that spiked down, which you can see there as I moved the line, moved here on the hourly. But we've got all these pivot highs and lows. They're opposing each other. So we've got technically another mess going on, but it's consolidating within a bullish move higher. So patience. Russell, you can see it's trying to hook up there, but there is that spike to the downside, and it's like the markets are just waiting. They're waiting for whatever, some other news, something to jiggle the markets, and then assumption of making the next move higher. So we'll see. It's got the room to go, as you can see on the hourly time, the weekly time frame. Bonds, they went down to support, started to move off of support, and kind of just stalled right there, right away. So we've got an interesting situation here where prices moved all the way up to resistance, right? We've been covering that for a while. That was our reference point, and now it's come down to support. And we've got a weekly couple of concepts going on here. We've got a failed breakdown that retraced 100% into resistance where there's going to be sellers. So we've got this larger move, right? This large bar, and it's sitting on the support. And we've got the bullishness of the depth of this retracement, the bearishness of this resistance, this pullback here, but at support. So I see it more as kind of like a standoff, and I don't know which way this is going to go. But you certainly should have alerts, and you could use TLT to see which way does this break below here as it come back up here again, because it's going to move the market. Oil is down here a little bit, but just more opposing pivot highs and lows. Gold coming right back again, right? My belief was it would come back. I'm a little surprised at the speed at which it's coming back, but it's retracing all the way back. Not all the way back, but it's on its way to getting all the way back, it looks like, and should be a red bar ignored. And silver is doing a similar thing, right? Just coming back up and almost to the top of the big red bar. Right? Alex is saying because of the dollar, right? The dollar and gold, they do have connections that kind of get tighter at times and looser at times. And the transports, lastly, holding up, right? The laggard holding up here so far. So there you have it. You know, we went into yesterday with thought of possibly being a go nowhere day. It pretty much was. And we'll see where today all shapes up. All yours, Dan.
All right, thanks. Good morning. I see these airlines weak again. So we have a couple of those put spreads and some core trades. Any news on Tesla today? Somebody is asking on YouTube. I have no idea. I'm not a news type guy. I'm a technical guy. But you know, here was the 5-for-1 announcement day, closing at all-time highs. I said it looks higher. It might run. Okay, there you go, Clint. Split as of ownership on Friday. It could run into Friday. Today's Tuesday, and it's starting to get extended. You know, things run 450 points. So I surely wouldn't be buying it as a swing trade. But look at it yesterday. We mentioned pre-market that it had a bullish gap, 15-minute high was viable. And then right there is a late day breakout. That's a quality late day breakout right there. Beautiful. But you know, the further you get, the harder it is. The reward to risk gets worse. That's why we love nailing our entries. Like Orly we're in. Orly we entered yesterday. You know, buy setup 180 reversal. AAP is up, so hopefully we should get a pop in Orly at the open. I don't see any volume now. Walmart. Shane's asking about Walmart had a nice pullback. I don't call that nice, Shane. It had a nice gap breakout yesterday. Do you think there was some inside information possibly? Beautiful close. It was up huge pre-market, went all the way up to 144. That is not a nice pullback. A gap like that should not have been negated. You got wide range bars, you got green bar ignored. This is a stay away from me right now. Yeah, that was earnings. The other big one was Home Depot. Here again, it was up huge. Blowout earnings. Same thing. It's a stay away right now. I mean, it should not have done that. Low has earnings. Yeah, I mean, you know what I was thinking when Low gapped up? Just again, how these just idiot public is just programmed. Oh, Home Depot is up, and they tell all their buddies, or you get a call from the analyst, Home Depot's up, we think you should buy Low right now, the competitor. And then these idiots who don't know what they're doing, oh, okay, I'll buy it at 164. Well, now you're down $5.50. So nothing to do there. Leo is asking about Square. We were trading that yesterday. Right now, it's a little M top with a bearish pre-market. So there's nothing to do with it right now. And markets are coming in a little bit pre-market. So we're going to have a stand aside here at the open. I just saw this little guy going by the ticker. And I remember, do you all remember what caused this crazy move? Does anyone remember? Give me one word. Racism. These were the racism. Yeah, protest, racism. The government saying, you know, BLM, we got to give money, we got to do this and this and this. And so this, I think my recollection is it's a black radio station. Do you really think the fundamentals I don't care what color radio station you are. Do you really, really, really think the value should go from $2 to $55? This is, I guarantee this was another Robin Hood trade. And then you had a bearish breakdown. Yesterday was another breakdown. Now pre-market, we have another breakdown. I think this thing's going back to the 200. I think it can get cut in half again. Looks horrible. Zoom I saw up. It's a bullish 15-minute chart, but you know, gapping right to resistance. There's no trade there for me. Yeah, it wasn't a protest per se, but it was all the legislation and you know, corporations. You know, they had that big movement wherever you turned to the S&P 500, and they were talking about, hey, we got to, you know what, you know the drill. All right, Foxtrot November. What do we got? We got a lower high, bearish consolidation, gapping under. So this is a definite candidate for a day trade short. We got a price void. I could easily see this going to 70 bucks. BLDP, Jason. Yeah, I like it. Gapping up to 16 bucks. Yeah, that's a nice gapper. I'll put that in a window on my other computer. Yeah, but that's a good gap setup. GRWG, yep, that's on the list. But tell me what you want to do with it, Jake. Don't just give me a symbol. Tell me what you are thinking, because I honestly have no idea. Tell me what you're thinking. Jake, we've been through this a gazillion times. The put spread has to be, you know, $10, maybe $11, and it said 18. Do you really think we're going to get any credit for 40% away? Number one, but number two, the thing is vertical. It's a gap and crap candidate. We don't short puts then. The place to short a put was on this gap breakout day to all-time highs, and you short a put under this red bar. That is the textbook entry. See, I didn't know if you're talking about selling a call spread 30-minute low, but there's no way for me selling a put spread. All right, BBY got an upgrade. Now, I wish this was gapping up like $5, because then it would be a gap and crap setup. Look, this thing, very bullish gap here. And you know how people like to say, oh, all gaps get filled. Well, that's a totally incorrect statement. Totally incorrect. And it went sideways and broke out. But now it's getting extended. We had, for those of you technicians that like to do, you know, whatever these names are, that's a little bearish hangman, although it's gapping above it, but momentum is slowed. So that BBY is ready for a rest. Let's see. Kalish is asking about General Motors. I think they got an upgrade either today or yesterday. There's no great pattern there. You know, up 3 bars now. For a new trade, this Ballard is superior because it's gapping from a base and it's closer to support. So this one is much better. Look at KSS. Another one had a bullish, that was a bullish gap this morning, 2450, provided it could have held the gap. And it's not. Safwa, Daku stopped us out early in the morning yesterday. If that's what you're asking about, any action, or I don't know if you're asking about a new trade or not.
We were long that yesterday, Dan, from 206.73. I sold near the high of the day on the slowing momentum. So maybe some are holding it.
All right, I slammed my doors shut. Hopefully that will help a little bit. All right, let's continue. All right, so KSS was a bullish gap, and now it's a bearish gap. 21 bucks. So this would be a call spread candidate. So see, Jake, this one's a lot closer to resistance, but we got to make sure it's going to stay bearish in the morning and not rip right back up and fill the gap. But it is a candidate for a bear call credit spread. Um, 822, this is a big old gap, MGS. That had a nice close yesterday. That's a nice bar from a consolidation, but nothing to do with it now. All right, Orly, here's our Orly gap up. See, I wish it had more volume pre-market, because then we could have sold, half pre-market. Let me move stop under this pivot right here. Okay, now it's back up. There we go. Go, boy. So let's just sell a third right here. That's what I was hoping for. And let's move stop. It shouldn't come under this pivot. Let's move stop 468.58. Yep, cruise lines, airlines, still dogging it. And you know, I talked to my cruise line, talked to my pilot friends, and they're like, they're on life support without, they're saying, yeah, if it hit it, take it. They're saying, you know, without government assistance, they said the government's been paying all the payrolls, and that they're still required to fly around empty planes and stuff. I don't know, that industry is still a big mess. And you know, I think some should have to file real bankruptcy. I mean, don't keep companies on life support. I don't agree with that. But I'm not the governor. JetBlue, yeah, JetBlue looks horrible now. We had the 11.10. Wonderful. I'm still having data problems. Can you tell me Travis, what you stopped that out so I can post it? I still got data problems. Wonderful. And we had a horrible day yesterday dealing with this crap. All right, so it looks like, you know, you can just, you know, just buy the $11 put, and because there's only a penny